If your stocks are down, you are not alone. We are seeing some of the weakest breath reading in months. So, hey, I am at mapsignals.com. I am looking at our latest insights piece, and man, have we been nailing the market all year. So, let's go ahead and get into it. What does the weakest breath reading really mean? It just means that a lot of stocks are not participating in this rally. S&P is up about 17% year to date. But when you look under the hood, and that's with the big money index here, this yellow line, you see that it's going lower. That is telling you that most stocks are not participating and in fact are getting sold hard. So that just tells us that only a few stocks are keeping the market up. And this next chart really describes that beautifully. If we look at the month of September, and you guys know we've been telling you to expect a weak September, that's what history shows, and also the big money, we can see that nearly 2-to-1 sells in companies smaller than 50 billion market cap. All right, so when you see a lot of outflows, that's going to bring the BMI lower. But what area has been rather healthy, that is going to be the larger cap. So when you go from 50 billion to 300 billion or more, you start to see a lot of names that are actually under accumulation. This is the reason why a lot of your stocks are down, but you look at the major indices, they are doing just fine. So what do you do in this type of environment? Well, you start to look where the value is, and you can see that very clearly in this easy to understand chart. Most stocks are cheap, and let me show you what I'm talking about. If you look at the S&P 500, the 12-month forward PE, it's at 18. Okay, in finance class, we learned that near 10 PE is cheap and 20 PE is expensive. So 18 really is not that exciting. But if we equal weight the S&P 500, okay, so it's not market cap weighted like the regular S&P 500. If we equal weight it, you're looking at a 15.5 PE. Again, that's right in the middle. So that's a little bit more appetizing than 18. But here's where the kicker is. If you look at small caps, and this is the small cap 600, the 12-month forward PE is near rock bottom levels of 13.4. This is definitely on the cheap side of the market. So are there deals out there? Absolutely. It's going to be in the small cap space. But then you got to ask the next question. When small caps are this cheap relative to large caps, what can you expect 12 months from now? Well, this cool study is telling you that the odds of small caps beating the S&P 500 a year from now stand at 78%. Listen, if you play Texas Hold'em, this is equivalent to holding pocket aces. Can aces get cracked? Absolutely, but you're supposed to put chips in the table. So this is how you use data to stay ahead of the market. If you're not receiving Map Signals insights in your email box, you want to click somewhere on this video, get signed up, because we are teaching you how the market really works. I'll see you guys next time.